Hello everyone, I'm Gregory Schnese and let's talk about Bitcoin Borrow Die. As always, these videos are for educational purposes only. They're not financial or tax advice. Today we'll go through loan to value, LTV ratios, margin calls, and liquidation. So just to recap really quick, the overall strategy is to buy Bitcoin because it's a rapidly appreciating asset, borrow dollars against it because this is income we can generate that triggers no taxable events, and then we pass on our inheritors inherit the assets at a stepped up cost basis. If you have any questions or wonder about any of these steps, check out our previous videos as I walk through all of them. So for today, let's talk about loan to value ratio, LTV, how it works, what it looks like, how this could potentially lead to margin calls and liquidation in the future. So loan to value is a financial term used to describe the ratio of a loan to the value of an asset used as collateral. So in this example, let's say we take out a $5,000 USD loan. We post $10,000 worth of Bitcoin as collateral. So this means that we have a loan to value ratio of 50%. So we take our loan value, $5,000, divided by $10,000, and then it gives us 50%. So for loan to value ratios, the lower the percent, that means the more over collateralized the loan is, or the safer it is for the borrower and for the lender. So like in this example, this gives us a loan to value ratio of 50%. But let's say instead of posting $10,000 of Bitcoin as collateral, we posted $100,000 and still only took out $5,000. So that would give us a loan to value ratio of 5% because we're posting 10 times the amount of collateral, but still taking out the same amount of loan. So from the lender's point of view, if somebody's going to post $100,000 of Bitcoin collateral and only take out a $5,000 loan against it, it's incredibly safe. Bitcoin would have to drop dramatically lower to have any potential issues with this. Lenders like to find borrowers that have low loan to value ratios because if you post a larger amount of collateral, it's just safer in general. So as we can see here in the right, all this green is for lower LTV ratios, and then we get to the yellow and to the red section over here. So what happens as the price of Bitcoin changes? So we'll take out a $5,000 loan. We post $10,000 as collateral, but Bitcoin could go up or down. So they did a really good job with this graphic here. So basically, as the price of Bitcoin goes up, we can see our loan to value ratio go down, which means that there's more collateral behind the loan. But then as the price of Bitcoin drops, the loan to value ratio goes up, which means that the loan is a greater percentage relative to the collateral. So depending on your platform, depending on the loan and the terms that you agree to, this is where we get into margin calls and liquidation. So for some platforms, they'll start to give you a margin call at 70%. So when we get into this yellow section over here, and then they would start to liquidate your position around 80% or higher to bring the loan back into a more safe position. So one of the risks with the Bitcoin Borrow Die strategy is managing and keeping an eye on your LTV and just making sure that, well, hopefully that you have enough collateral posted that you don't get margin calls or you don't have to worry about that, but that you can at least see them coming sooner and then never have to be in a place to be forced liquidated. So I want to introduce you all to a new service that I created called Margin Watch, and it basically does exactly that. So this is Margin Watch here, where it's a new service where it will give you daily Bitcoin loan alerts to give you a status update on your loan, your LTV, different scenarios, and it allows you to stay ahead of any potential issues in the market if the price of Bitcoin declines, so that you could post more collateral well in advance to avoid margin calls and any liquidation. So just walking through this service here, we have a free dashboard that anybody can access. Sign up, enter your information, and then it'll show you Bitcoin price, your loan to value over time, and it'll just give you a heads up in terms of bear market scenarios. And then there's a pro email alert feature where we'll email you this information every day, basically just to check on your loan, to check on the collateral on chain, and to make sure that everything's good to go. And we have risk outlook models as well. You can see historical trends and insights. And then it's just really simple pricing. So again, a free account, you can log in and see the dashboard. And then if you want alerts so that you can have it come to you every day, just just check it off your list in the morning so that you know everything's good to go. We have monthly and yearly plans. So let me log in and show you what the dashboard looks like and walk you through that. So when I sign in here, this will show me information about my Bitcoin collateralized loan. So we'll start with the current market here. So with Bitcoin at a price of about 121,000, I have about a 30% LTV. So again, the lower the LTV, the safer. The higher the LTV, the more risk. And after you get past a certain threshold, you'll start to get margin calls, which means you have to post additional collateral within a certain amount of time. And then if the LTV goes too high, they'll start to sell your collateral to bring the loan back into a safer space. So one of the really nice features about Margin Watch, it'll show you the current market value, which is great. So you can just kind of get an overall sense of how your loan is performing and if you need to do anything. But then it also will show you what it could look like if we were in a bear market or in a big bear market, in the sense that if Bitcoin decreased by 20% right away, like today, to $93,000, I would still be under a 40% LTV, which is considered safe. So you might want to keep an eye on it, but I wouldn't have to do anything or take any additional action. Now, let's say we drop by 30% or more and we got to $81,000 price for Bitcoin. That would bring my LTV up to 45%, which again is relatively low, but we're trying to be conservative and give people a good heads up to just to like manage their loans and have peace of mind and have it be stress-free. Now, we could change these values. So we could say something like, if it was a 40% drop, right, then we would get to like 72,000-ish price per Bitcoin, and the LTV would go up from there. So it just allows you to like see your LTV, make sure your loan is good to go in the current market, and then how it could look if things got worse over time. And then we also show you the price of Bitcoin, your loan amount, the collateral that was posted, and your LTV, and then the price of Bitcoin over time, and then your collateral value over time. And then we'll also show you your loan to value ratio as it changes over the past 30 days. So if we look back here on September 10th, my LTV was 32%, which is good. It's nice and low. Well below any warning or danger zones, given the Bitcoin price for my collateral. But then as we move this across over time, we can see the LTV change as the price of Bitcoin changes. And then Bitcoin has been on a bit of a run lately, so we start to drop down into like the 29s for LTV, because again, the price or the collateral value has increased, the loan value stays the same, so the LTV ratio drops. If your loan provider gave you a Bitcoin address, you can check your collateral on chain. It will check it every day for you to make sure there's no rehypothecation and to make sure that the funds are still on chain as expected. And then looking through the settings here, like you can change some of your settings. You'll get an email. You can see your Bitcoin address on chain, contact, all that good stuff. And then for the Pro feature, we'll email you this every day or every week. It's up to you. So this is the email I received this morning of my current market. Again, under 30% for LTV. That's great. It'd be 45% if Bitcoin dropped a bunch, like 30%. And it'd be about 39% if we dropped 20%. So even with a 30% drop in LTV or in Bitcoin price, my LTV would be fine. My loan would be healthy. I wouldn't need to do anything differently. But this just gives you peace of mind. It monitors your loans every day. It's a great way to start your day to make sure that everything looks good. So again, this is Margin Watch, a new service that I just launched. Check us out at margin-watch.com. Let me know if you have any questions.